So why do we look at the calendar? We look at the calendar to spot high probability trading events, and we put up the particular things to look for on our cheat sheet, which we publish each day looking for key opportunities in the market. On this cheat sheet, we try to put the very best information, and you can see here from this cheat sheet, we took profit on two long gold positions, one from July the 8th and one July the 12th, with absolutely minimum risk, taking profit at the 2-4 $40 an ounce. Now, this is a little bit old, this cheat sheet, and that's because I'm taking a break for the summer, but I wanted to make sure that I got the calendar events flagged up in advance for you so you can see some big events and you're not left without being able to see the key events that are coming up. So this is a look ahead, but it's done significantly before the event, but nevertheless, there are still some big events which I can see and flag up. But just little disclaimer, bear in mind that this has the potential to be outdated, although I am trying to choose things which are particularly useful. So Monday 29th of July, there's nothing particular to notice there. 30th of July, got flash GDP for the Eurozone. Eurozone very neutral at the moment. The ECB are probably just wanting to hold the interest rates as they currently are at the moment. This is recordings made before the ECB rate decision, but it's most likely that even if they do a little bit of signaling, that they just want to keep things flexible and they want to respond to data in case inflation is a little bit stickier, particularly domestic inflation. So German GDP data, unlikely to move the needle very much. If it comes in stronger than it's expecting, it can allow the ECB a little bit more flexibility potentially to hold rates for longer, which would help them to deal with a slightly stickier inflation that they're currently dealing with, but nothing particularly massively tradable here. US consumer confidence, not a major data point for us to look at. However, on the 31st of July, we do have a major data point. This Aussie CPI data has been anticipated really since the last RBA interest rate decision. If this comes in a big beat, then expect that to continue to support the Australian dollar higher. Similarly, a big miss in the CPI print, then markets will start to gain confidence that maybe the RBA can start signalling interest rate cuts. The RBA, if you look at their interest rates, you can see that they are currently got rates at 4.35%. Markets are sort of expecting a hold. They've seen a firmer expectation come in for the RBA since a hot CPI print, and the RBA themselves are just sort of focusing very much on this upcoming data for this CPI print. That will be significant. So do look out for volatility around this Aussie CPI, really anticipated. Then we've got some French, German data out, the Eurozone flash inflation. If it does come in firmer than expected, should maybe continue to support the euro. Keep looking for, I'm continuing looking for euro pound upside opportunities, particularly if and when we see the Bank of England start signalling cutting interest rates. Thursday, got Bank of England interest rate decision. Now, markets have been anticipating, what are they going to do? This recording is done before the latest CPI print out for the UK, so that will influence markets. But any clear signal of cutting deeper, more rigorously, any concerns about slowing growth, then look for heavy pound selling. Pound's been stretched. I wouldn't be surprised if that starts moving. But obviously, you have to bear in mind that I'm doing this recording some time before the 1st of August meeting. But if we start to signaling a deeper cut, a more ambitious rate cut projection from the Bank of England, expect that to send the pound lower. Euro pound upside would seem reasonable given current situations. ISM data for the US, but we really want to focus on services print. Then on Friday, Swiss CPI could always move markets. Inflation well within the 2% target for the SMB, but a big miss or a beat above or below market expectations has the potential to miss the Swiss franc. So of all these data points, the biggest two is the Aussie CPI print and the Bank of England interest rate decision on Thursday, with a couple of others to look at, like the Swiss CPI is definitely worth looking at. They're the main ones actually to be looking at. Canadian GDP, worth looking at. If you see a bigger than expected miss, then that does open up the path for the permission for interest rate cuts from the Bank of Canada, who are nervous about the amount of Canadians who still need to renegotiate their mortgages at the new higher rates. Okay, that's all for now. Just remember that this recording is done sometime in advance, so do check out the daily cheat sheet. That is being covered very capably in my absence, so any doubt, look at the cheat sheet and go with that above my analysis here, because this is done in advance. Wanted to give you something so you can see what the major events are likely to be, and they're very likely to be the major events anyway, but do just bear that in mind, that this is done quite some time in advance.